Did you know you can get up to a $10,000 increase on your Capital One Quicksilver card? Well, in today's video, I'm going to show you what you need to do to apply, and I'm going to give you some secrets on how you can get that increase ASAP. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allows you to put your credit repair experience into your own hands. Guys, if you're new to the channel, I'm super excited because I have a banger. If you're new to the channel here, please like and subscribe to the channel. That allows us to reach a wider audience, and allows YouTube to push this content to within an algorithm, and allows us to leave these lights on. Guys, please like and subscribe to the channel. All right, let's dive straight into the meat and potatoes. This is going to be a lot of nuggets within this video, and hopefully I can help some individuals that have the Capital One Quicksilver card get a higher limit. Now, the methods that I'm going to teach in this video can get you a Quicksilver card increase up to $10,000. A lot of my students, I'll say around 80% of my students, are getting that limit with these methods that they are applying. So guys, this is going to be definitely a lot of meat and potatoes in this video. Now, if you have anything derogatory on your credit report, I mean late payments, charge-offs, collections, anything like that, guys, you want to go to mycreditapproved.com. It's the website that I told you about that allows you to actually put the full experience into your own hands. It allows you to remove anything derogatory. Now, I always teach credit building tips, and I always teach methods where you can get these items even with bad credit, but you are going to have to fix your credit eventually, guys, and you are going to want to put your experience into your own hands. Stop hiring credit repair companies to do what you can do at a cheaper and a more effective way. Go to mycreditapproved.com. All right, let's dive straight into the meat and potatoes of this video. Now, the first thing that you want to look out for in regards to getting this increase is to make sure that you are structuring your profile with Capital One properly before you actually reach out for the increase. You don't want to get any denials, or you don't want to get a mass amount of denials pertaining to this increase on the profile or in the algorithm that could potentially stop you from getting it in the future. So the first that you want to do is make sure that you are seasoning the account. Well, actually, the account has to be a minimum of 3 months old. Now, the time frame that I am teaching my clients to do is around 6 months. So instead of going 3 months, let's do 6 months. You'll have anything else to do, and you can't actually ask for an increase past a 6-month mark. So if you have already asked for an increase within a 6-month time frame, you cannot ask for another one before a 6-month time frame. So you want to make sure that you look out for that. So that's why you want to, like I said, you want to make sure that you're structuring the entire profile properly so you can get the increase instantly and you can move on to the next step of funding. Now, what you really want to make sure of in regards to the profile is that you have an all on-time payments. Within the 6 months that you are nurturing and seasoning the account, you want to make sure that you are having 100% on-time payments, guys. This is going to be the bread and butter and a big deciding factor whether you get approved with Capital One or denied when it comes to your increase. Now, they are going to be monitoring everything pertaining to your profile, especially pertaining to this card within the time frame of the 6 months. Now, you actually have eligibility to get a line increase every 6 months. So every 6 months, Capital One gives you a courtesy line increase option where you can actually get the line increase after a 6-month time period. So that's always good to look for. And while you're actually waiting for that seasoning and that courtesy increase time to come up, you want to be seasoning the account as much as possible. So what I mean by seasoning the account, like I said, is payment history. The second is going to be your utilization. Your utilization is going to be one of the biggest factors pertaining to this application approval, because they are going to see how much you are over leveraging the funding that you are already having. And this is not just going to be always pertaining to the Quicksilver card that you currently have. This can be pertaining to any type of funding that you currently have on your credit report in total. This can be a wide range of all of the utilization in the average of all of your cards put together. It can be the average payment history of all your cards put together. So you want to be understanding that they're going to have access to look at the other types of funding that you have on your credit report. And if you're not appropriating those fundings or those institutions right now, then 9 times out of 10, you're not going to put yourself in a prime position to get approved for any new levels of funding, even a line increase up to 10,000. Well, in this case, so you want to make sure that you are maintaining all of your lines of funding pretty well throughout this time frame. You want to make sure that you are having all your payment history updated in your utilization as well. Now, the other thing that you can do to nurture your account, and a lot of people don't know this, but get a bank account. Get a bank account and start putting a small deposit in there so they can get some transactional history, so it can weigh within the decision making. If they only have one credit card to weigh the decision of you getting approved for a $10,000 credit card increase, it's not always going to be ideal if they only have one option to look at, which is that one particular card. So the more products that you have with this institution, the better confidence that they're going to give when it comes to giving you this higher increase. Now, I do want you to understand that the increase is going to be also determined by the type of limits that you currently have. So if you only have a $500 credit card limit, and it's just not with Capital One, if you just have if the highest credit card that you have on your credit report is $500, they're not normally going to give you a higher limit than that because they don't see any type of track record with you having large lines of credit lines. So what you have to do in most instances is put yourself in a position to go to institutions that give you large lines introductory, and Capital One is one, but Navy Federal is also one. So if you have Navy Federal cards or if you have a Navy Federal account, think about getting some higher limits with them. So when you go to apply with any other creditor, whether it's a Capital One increase or anything, they're going to typically match what you already have on the credit report. So if you don't have a lot of higher limit credit cards on the credit report, then a lot of times that you put yourself in a position where they're going to match the potential that you already are using on a month-to-month basis. They're not going to overextend the line where the risk factor increases. Okay, so get the bank account. Now, a lot of people are probably going to tell you to do this over the internet or via the app. Now, you can do that. I've seen some success with it, to be honest, but the best course of action is to get someone on the phone. If you get someone on the phone and you have a lot of the methods and the structures put in place that we just talked about, those are negotiation tactics that you can use, get the loan approved or get a higher limit that they initially give you. They give you a $7,000 or a $3,000 credit line, then you can get on the phone, get the go to the reconsideration line, and you can call them and talk to someone directly. It's going to give you a lot more weight when it comes to those approvals, especially if they can see all of the profile backing that you have already structured within the 6-month time frame. Guys, if you find any of this information helpful, please do me a favor, like and subscribe to the channel. And like I said, it helps us go within the YouTube algorithm, and it allows us to get pushed to a wider audience. So I also want to talk about this when it comes to the application. So I gave you a lot of structures and a lot of methods, but I definitely want to talk about the application as a whole. So if you are on the application in terms of via the web or the app, you want to make sure that you are putting the correct information in the application. Now, I do have a video about what not to do when it comes to any credit card application, and you can look at that right here. But for the most part, you want to make sure that when you go on an application, you are labeling all of your annual income. So your annual income can be anything that you basically are bringing in. So if you are over 21 years of age, you can also add shared income. Shared income is going to be the income that's going to be accumulated through vehicles like Cash App or any type of vehicle that you are getting getting consistent income from an outside source other than a job or a W-2. So when you go to the annual income, you always want to put the most that you can possibly put on the annual income. Now, if you have a bank account with them, you don't want to put something super outlandish where it just take the credibility from the application, because they have access to your transactional history and your lifestyle, so to speak. So, but for the most part, you want to put that your annual income is as high as you possibly can, and you want to add as much as you can to the annual income, because it's going to weigh a lot on the deciding factor for the application. Now, your monthly expenses is going to be the second thing that I want you guys to focus on. The monthly expenses is going to give you your DTI, your debt to income ratio. So what you bring in annually versus how much you are spending monthly is going to give you a ratio, which is your debt to income. Now, your debt to income ratio is going to be the number one deciding factor that most institutions are going to use. They're going to use the ratio of how much you're bringing in versus how much you are taking out, and see the credibility that you have to pay them back if anything becomes default. So you want your debt to income ratio as low as possible. So you want to make sure that when you are applying, if you are doing it over the web or on the app, you want to make sure the debt to income ratio is as low as possible. And guys, if you take any of these methods that I've given you, I'm more than confident that you guys are going to be successful when it comes to these approvals. Capital One wants to give these lines out. They want to give you these high limits. They just want to make sure the profiles are structured and your risk factor is low. So guys, like I said, if you find any of this information helpful, please like and subscribe to the channel, and let us know in the comments your trials and tribulations when it comes to Capital One. If you are having any problems with the application, if you're having a mass amount of denials, let us know in the comments and see if we can give you some guidance and some correction for your applications in the future. Guys, until next time, take care of your credit and take care of yourself. Credit Coach Q out.